I was young, I was foolish, and well, eventually it worked out. But there's been, of course, some rocky years, like the life of an entrepreneur is, as you know very well. There's a lot of ups and downs and different cycles you have to go through.
That was the voice of Julien Plouzeau, senior partner at Oraseya Capital. I am your host, Ali Zwail, and this is the Startups Arabia podcast, where you learn about the Arab startups ecosystem from the best founders, investors, and operators in the region. My guest today is Julien Plouzeau. He's the senior partner and investment committee member at Oraseya Capital, where he leads the firm's investment strategy, oversees deal sourcing and execution, and actively manages a diverse portfolio of early-stage startups. Oraseya Capital invests from pre-seed to Series B stages. In 2021, Julien launched SANDBOX, the Oraseya program that invested in hundreds of founders with 16 investments made in 2024 alone. Julien plays a pivotal role in mentoring founders, building long-term partnerships, and guiding portfolio companies towards sustainable growth and success. Active in the UAE startup ecosystem since 2012, Julien brings extensive experience as both a founder and investor during this period. He began his career as an investment banker with Societe Generale CIB in Italy, working on multi-billion-dollar corporate finance transactions. After first moving to Dubai, a story he tells during the interview, he launched his first startup, an online artist agency representing over 1,000 talents across the region, which he successfully exited. He subsequently contributed to several ventures as a co-founder, advisor, and product director. Enjoy the very UAE focused and very interesting interview with Julien. Welcome to the Startups Arabia podcast. My guest today is Julien Plouzeau. I really hope I pronounced that right. He is the senior partner of Oraseya Capital, and this is an exceptional firm in the sense that it has made a huge amount of investments in the UAE over the past year. We're going to talk about that during the interview. So I'm really looking forward to learning about the UAE ecosystem and the MENA ecosystem overall from Julien. Welcome, Julien.
Thank you, Ali. Thank you very much. Very excited to be here. Thank you for the invite and looking forward to a nice conversation.
Wonderful. All right. So I think you moved, maybe we could start there. You moved from Europe to Dubai back in 2012. Which is an interesting move. You were in investment banking in Italy, and then you moved to be an entrepreneur in Dubai. What made you make this move, and how do you reflect on this 12 years later?
That's a very interesting question. I've always been reflecting on that point because when I went to university, so I studied in France, a bit in the US, then in Italy at Bocconi University in Milan. I was not necessarily sure about what I wanted to do afterwards, but I wanted to work in finance, but not necessarily which field in finance. So I tried a bit of everything at that time: trading, equity research, eventually corporate banking was what I got attracted to. So I did a bit of everything, mostly working on the debt side of in the debt capital market and origination. And I really liked it for a few years. Had a great team at Societe Generale. Actually, I had a great manager called Antonio Guadagnino, who's still 20 years after a very good friend of mine. And at that time, I thought there might be something different I want to do, like not necessarily being on the sales side or advisory side. And and I wanted to kind of create something of my own. And because the backstory is, before going to university, I started my first business when I was 16. I was building websites and so on, and I've done a bit of money like this before getting into a higher degree. So I just wanted to get back into it. I had always had an entrepreneurial mindset since I'm a kid. And at that time, my brother actually was living in Dubai, and I had never been to Dubai and never been to the Middle East actually. And I'm just curious, can I do something over there? So I kind of quit cold turkey investment banking at the
Wow.
time, moved to Dubai, and figured out everything kind of by myself. So yeah, we started the first company there, and the second one, and eventually ended up in venture capital. So it's it's a bit of a. I was young, I was foolish, and well, eventually it worked out. But there's been, of course, some rocky years. Like the life of an entrepreneur is, as you know very well, it's is there's a lot of ups and downs and different cycles you have to go through. So I've been lucky to been through good times to bad times, which I think helps me in my day-to-day job, especially portfolio management side. I have a lot of empathy for founders. I understand, again, not only when it's a good time, but also when when it's a bit more challenging, and I don't necessarily know how to fix your problems, but at least I would be understanding of your problems.
Yeah, yeah. I mean, building startups is really about the bad times, passing the bad times as much as it is about wonderful growth stories. But this is the backstory many people don't realize, right?
You're absolutely right. I think like your day can change from a minute to another. Just one email or one communication can complete your day upside down. And we see some of the best founders we get the chance to work with, the emotional stability and the defense mechanism they built in the day to day life. It's just absolutely amazing. Because again, as you said rightly, it's you will see more challenges than good days, and the good days are fantastic when they happen. But the truth is, you have more bad days than good days.
Yeah, yeah. So, having, I mean, heard your story, I mean, you you kind of switched from investment banking to entrepreneurship first before going to venture,
Yeah.
and that's understandable. I mean, other people have done it, but you also switched geolocations. So, I mean, you switched to Dubai. I mean, why didn't you do a startup or a company in Italy or France, for example? What made you? What attracted you to Dubai?
So the first time I came to Dubai was in the middle of the winter, around Christmas time, visiting my brother and my family here. And I remember my first time like strolling through Czech Zayed, going to downtown and the Marina and the pub, and that's as not a kid, but as like somebody in his like mid 20s, I saw the appeal of a fast-moving city, cosmopolitan, a lot of things to be built, and the more I talked to different people, different expats, and also a few Emirati friends of my brother, I realized it's a land of opportunity, and probably Europe has many different options available to me as still like a young professional. But I wanted something a bit more challenging and something completely new, and I've always been kind of like this, like, with the ability to take some leap of faith. And I thought, look, if I don't do it now, I'll regret it. I'm just on the back of 3, 4 years in investment banking. I have a bit of money saved on the bank account. I can try something for like a year. If it doesn't work, doesn't stick, then I can always come back to a corporate job, a financial job, or do something else in Europe. And yeah, well, 13 years now, I'm still here, and I'm probably not going anywhere.
Yeah, yeah, great story. Um, so, and then you kind of came full circle to coming back to finance and investment. So, from investment banking, entrepreneurship, and then back to venture capital. But they're pretty different. I mean, what have you found to be different and what's similar between investment banking and venture capital?
I think investment banking, the pressure is completely different because the pressure is very short term. The objective you have to achieve in venture capital are long term, right? So you don't actually see the outcome immediately. It will take some time in venture capital to realize whether you've made some good investments, whether your portfolio is performing well, whether you have capacity and how much you're going to return to your LPs. In investment banking, you're selling services, right? And you have to achieve it within a certain time frame, which is really a year, if you want to have a nice bonus at the end of the year, right? So you basically sell services, and in venture capital on the buy side, you don't necessarily sell a service, you sell yourself, and then you buy a stake in a company, but you have to sell yourself more than anything. In
Right.
For me, that's a bit the difference. But in terms also like workload, work culture, and so on, banking is quite aggressive. Things have changed, of course, over the time, but and I was not in a very aggressive bank. I was in a French bank, not in American banks, and in Italy. So the culture was slightly different. but still, like, we were working very hard, every night and most of the weekends, like an analyst or associate. But that was quite interesting and I learned a lot actually at the time in investment banking, because I got a lot of exposure. I was working in a very small team, so there was only my managing director and myself in our team,
Oh,
and we would probably close 6 to 8 transactions per year. So I was exposed very fast to top senior financial managers in the big companies that you see listed in Italy, Eni, Enel, Telecom Italia, Pirelli. So I got a bit lucky in that regard. I learned how to interact pretty fast with decision makers and how to speak the language.
yeah, it is. I think the timeline is so different indeed. I think that's a great point you make. The challenge with VC is the very long term horizon for getting feedback on what you've done, so to speak.
You have a J curve in VC, right? So that means within like 3 4 years, you need to start seeing some result that covers your management fees. You tend to see more write-off than uptick in the first couple of years. That's just the natural
Exactly.
distribution of expectation and return that you see in VC, right? It's you have more failures technically than success, and you see the failure happening much faster than the success. The success, they have to compound to be to reach a critical mass for your portfolio to perform well, and this compound effect takes like multiple years. But
Yeah.
the failure, it's very fast usually.
Yeah. It takes patient LPs, so to speak.
Yeah, especially in the region, it's
Yeah.
still a bit of an illiquid market, still emerging, maturing fast, but still emerging, and
Hmm.
it will take a bit more time to understand how long is the typical portfolio cycle in the
Mm.
Middle East. And I don't think we've clarified that yet. Like, it take a bit more time, but it's
Yeah.
accelerating. See more and more exit and more liquidity coming back.
Yeah. So there are challenges in terms of exit options still, right, in the region, and
Yeah,
that kind of elongates the time to getting your cash back.
that's correct. Yes.
Yeah. So maybe we can talk a bit about Oraseya. It's the VC arm of Dubai Integrated Economic Zones
Yeah.
Authority. And so, why did DIEZ decide to create a VC arm, and what's the mission of the fund?
So DIEZ, that stands for Dubai Integrated Economic Zone Authority,
Hmm.
operates 3 economic zones. We used to call them free zone. Now it's an economic zone for obvious reason. We operate
Hmm.
Dubai Silicon Oasis, Dubai Airport Free Zone, and Dubai Commerce City. So the organization through Dubai Silicon Oasis has been investing actually for the past 12, 13 years. Our first investment was in Writer.com, was called Cordoba at the time, led by May
Mm.
Habib.
Yep.
Writer, is a unicorn now in US. We're still a
Yeah.
shareholder
Amazing
actually
company.
of Writer, so we're still in cap
Yeah.
table. So we've been investing actually for over 12 years, and we had different programs in the past. We operated Silicon Oasis Founders, Dtec Ventures. That's actually when I joined the team at that time, and also we operated and hosted Dubai Smart City Accelerator with Startup Bootcamp. So we've been
Hmm.
at it in terms of investment. The organization has been at it in terms of investment for over 12 years, and pre Oraseya, we
Hmm.
closed between 45 and 50 investments. So
Yep.
it's not new to us. We've probably been one of the like oldest institutional investor actually in Dubai. So why did we want to launch Oraseya? First, we uh, we merged the 3 economic zones. So we had, let's say, a larger financial spectrum
Hmm.
and potential to deploy funds at scale. That's one.
Yep.
Second is we we started building a very solid team that got the, let's say, the support from our leadership, and especially from His Excellency Dr. Mohamed Al Zarouni, the CEO and Vice Chairman of Diez. So we wanted to do more. We wanted to contribute more first to also the ecosystem because we are seen as a government fund at the end of the day, or government-backed fund. So having a strong impact for the Dubai economy and the UAE is very important to us. That being said, we're financial organizations. We're purely financially driven, as
Mm-hmm.
any other VCs. And what we wanted to do with Oraseya is build a fund in a way that's very representative of our organization. So we've been supportive from and investing from the earlier stage, pre-seed seed, going
Mm-hmm.
into a growth stage, Series A, Series B. And we have a lot of those scale-ups, if you want, or early growth stage startups that have been setting up in our economic zone. So we're not a captive fund in the sense we only invest in our zones. We're absolutely not. We invest across the UAE. That's part of our mandate. But Oraseya is, let's say, symbiotic with the economic zone. So it plugs in
Right.
very nicely. And it made sense for us to, one, create a separate entity. So we spun off the fund from the administrative, let's say, organization, but it's fully
Mm-hmm.
controlled and fully owned by DS. So our board, the board of DS, is composed of members of DS senior leadership, and then the fund is
Mm-hmm.
operated by me and then the team afterwards. So yeah, that's how it works with DS, which is perfect for us to. DS is a fantastic LP, very
Yep.
supportive, and one of the benefits of having DS and this ecosystem of economic zones is we can plug our portfolio companies into the different free zones, right? So not only sometimes for us, those are
Yeah.
services we want to avail. Certain software that completely makes sense for us to use for all our employees, but also because we have a lot of like SMEs
Mm-hmm.
in the different zones. So if we invest in a SaaS B2B targeting SMEs, we have
Mm-hmm.
dozens of thousands of those SMEs in
Right.
our backyard. So we can connect you as a founder to them. We can do some outreach. So it helps a little bit to some extent
Mm.
grow your business by being a portfolio company and part of the ecosystem.
Yeah. So it's great that there's a strategic or very long term outlook, and that you have this symbiotic relationship, but it's not a constraining relationship. So for the startups, I mean, and the economic zone, and that's a really cool thing too. So you guys, you were the number one investor in UAE startups, as I see here in 2024, with 24 investments. Congratulations, first.
Thank
And
you.
what has been the theme of your investments, and how do you feel getting into 2025? What are you looking forward to as we're a third of the way almost through this year?
So for us being, let's say, the first investor in terms of deal counts as per the Magnet reports in 2024. It's a bit of a vanity metric. That means it's not necessarily what we look
Mm,
for. But I think at the end of the day, and that's what we've heard also from some of our peers, it's just a sign of having like a healthy organization, a healthy process, and healthy like deployment capabilities. If you don't invest, that's not great. If you have the capacity to invest across stages with different ticket size and being very agile, because we are extremely agile in the way we deploy and invest, I think it's a good sign of health. So that's the first thing. So last year
hmm
was also like very pivotal for us because we officially launched the fund like on the 1st of January. So for our
mm,
first year, I was still building the team. We're still recruiting, in June, like our principal, so Omar Khan joined the team in July. That was you know, like massive fresh air for us. Like the bandwidth increased by 100% immediately. We have an
yep.
associate who joined, Mohanad, also a few other people like in the SANDBOX team because we have those two streams within SANDBOX and our principal investments. So last year we were building the team. We're still actually building some of our capabilities from an HR standpoint. So we'll add up.
Mm,
So for us getting into 2025, we feel like we're actually much more ready than we were last year, and that it evidenced by the deal flow we received, that we approach, that we assess. Just in Q1, we've actually did more deals in the later stage, so in the Series B, around the Series B, so
interesting.
pre-B and B. I don't know if you're aware, but our ticket size for principal investments, the range is from $500,000 to $3 million. So we had
Mm,
the chance to do a couple of those like higher ticket, $3 million earlier this year
Yep.
in Series B startup. One was announced, that was ImCard. The other one is not announced, but should be announced soon. So we'll discuss that probably later.
Yeah.
But we started the year very strong in terms of principal investment, but we started the year also very strong with our SANDBOX. So we just closed our sixth cohort like 2 weeks ago. And so now we're closing our investment in this cohort. So we'll officially announce 8 to 9 investments. One is still being negotiated as we speak. So yeah, we should be on track to beat our numbers from last year. But it's not only in the number of deals we do; it's also the capital deployments. In the first
Yep.
again 3-4 months of the year, we have deployed as much as we've deployed last year. So again,
Wow.
that indicates the willingness that from our team, from our leadership to do more and to ramp up, and we're just building our confidence at the end of the day. And as the team is growing, as people get to know the work that we do, founders that we support that come back to us because they want to make some intros, because they like the way
Yeah.
we've been interacting with them and supporting them. Other VCs that have noticed that we can actually act fast. Sorry, because you mentioned earlier a point which is very critical is like as a government back entity, sometime process could appear to be long. For us, we're very fast, and access to we're a small
Mm.
investment committee, access to the board, it's extremely fast. Our leadership and board members, you know, respond very swiftly. We've seen investment that we can close from like end to end in less than a month. So for us, that was also what we did last year, building all those processes, make sure we're efficient. So I think that helps us. Being more visible in the market, those type of numbers being published by Magnet, and I think Magnet has done always some great work in the ecosystem. So like this year we'll probably be on track to do something similar. Whether we're number one, number two, number three, I can't tell. That doesn't really matter to us. It's more
Mm.
deploying more. It's it's kind of our target for this year, doing more than we did last year, and then we'll start looking at what 2026 is looking like.
Yeah. That's incredible. And there's so many things I want to kind of double click on from what you said.
Yeah.
So maybe I'll start with your kind of breadth of focus, because you're investing all the way from like pre-seed to Series B, and that's pretty. I mean, that's isn't easy to manage. So I mean, why did you decide to approach things this way? As opposed to having like very early stage focus or growth stage focus or something like that.
We we strongly believe we have to be opportunistic as VCs,
Mm.
especially early stage VCs, covering only one, let's say, region or country. We mostly invest in UAE based startup, so that's one
Right.
of our mandate. You have to have a focus or nexus to the UAE. That means the founders are either based in Dubai or Abu Dhabi, you are commercially launched in the country, or
Mm-hmm.
you are providing a service or you build a solution that we don't have here, but that is clearly needed for either individual businesses or government. So this is our
Mm.
scope of work, right? So we need to have this nexus. If we start verticalizing, let's say, into prop tech, into logistics, into fintech, then our deal flow will be much more limited because we're not covering necessarily Saudi Arabia or
Mm.
North Africa and other
Right.
region. So that's one thing. Make sure we cover the whole spectrum of potential of opportunities in the country.
Mm-hmm.
Now we having a dual approach or multi-stage approach, if you want, because we can write a first ticket at any point in time from pre-seed to B and follow on afterwards and ramp up afterwards if need be. It's it's not only a way to contribute to the local ecosystem and bridging some gaps. We all know raising a pre-seed round is extremely difficult. There's a
Yep.
few VCs doing that. Plus VC typically is one. You have a few
Mm-hmm.
other names that we can talk about. And then Series B, same. You have a bit of a gap, right? So for us, we know most of the VCs are investing seed, Series A, and now there's let's say a move up in the ladder, and a bit more of Series B round happening and being covered. But we want to make sure there's some liquidity coming on our side as well. And probably in a few years we'll start looking at Series C, but that's going to be the next gap, right? So that was one of the reasons important to us. Let's
Great.
cover pre-seed
Yeah.
and B while still doing seed and Series A, which is the what we know to do best. Third is investing through SANDBOX at pre-seed and seed is building our deal flow in the future. So there are a lot of investments that, for small tickets, with the fund size that we have and the small team as we have, it doesn't necessarily make sense to spend a lot of time for like a 100K, 200K tickets. You need to do the work when you have a potential to deploy 500,000 or 1 million plus in a pre-seed and seed, but then you have to build a strong conviction on those deals. So for us, we have different approaches. We pack multiple startup into a program, which is seen as an accelerator, as simple as that, and we call it actually the accelerator as well ourselves. But what we do is we do due diligence at scale. So we have experts that we work with. My team is involved as well, and we'll do 20 due diligence all together in a month's time. When we, at the end of the day, we have a news memo, which is produced with a tech due diligence, a financial due diligence, a legal due diligence, a commercial due diligence, even at precedence. Based on that, we can decide on investment. So that means we are investing with conviction. It's not a spray and pray mechanism that we have or thesis at all. So we invest with conviction. But then what happens is within a year or two, we start seeing who's performing very well, who has the potential to grow and scale even further. And that's when we can then solve for equity and start building a bigger stake into those companies. Early stage, pre-seed and seed, we're very flexible in the sense we align to the latest terms that you raised at. So if you raised a convertible at $6 million post money like a couple of months ago, we will agree that we align on that valuation. We don't price, we don't try to get like a 5% stake as other programs do. For us, no, that's not the way we operate. We don't solve for equity ownership at that stage. We solve for discoverability, building a pipeline of potential deals in the future. Once we've spent more time with you after like 6 months, a year, and so on, that's when we tend to reinvest and ramp up into at the Series A or seed round if there was a pre-seed deal. And boys, that's a strategy. That's how we cover pre-seed to be. And I strongly believe in probably 2 years' time, 50% of our principal investments, so later stage investment we do, will come from our SANDBOX program. We've run six cohorts. We'll start cohort number 7 in September. So we're running 2 cohorts per year. We'll do 15, 20 investment per year through SANDBOX. So yeah, we should be able to find every year at least 4 or 5 very good deals that we want to ramp up and invest even more.
Right. Okay, and that kind of explains, how. I mean, it's not at the end. It's of course it's a significant fund, but because if it's investing in Series B, then it's 135 million with such a huge number of investments would be challenging. But the way you're structuring it, makes it make sense. And as I understand it, it's because your geographic focus also drives your strategy because of the fact that you need to get enough coverage. And I think a lot of people don't realize also that the number of investments is in itself a very good way to achieve success in venture, because there's a power law and you have a much higher probability of getting these really huge outcomes in your portfolio if you're investing in a lot of companies. So that's really cool.
That's a very good point, especially on power law, because I think for us it applies even more so in an emerging market, because it's not only about finding the needle in the haystack, it's making sure you can actually sell it afterward, because you have on both sides of the equation, the issue of finding the right founders and the one that eventually will deliver some returns. But to deliver some returns, you're able to find somebody who's ready to acquire it down the line. And I think for us, that's also one of the main components of deploying at scale at the very early stage, is not only looking at startup that will return, but startup that one day will be able to be like acquired or go through the public
Mm.
markets and IPO, and it's for an IPO. So that's yeah.
Yeah, great. So there are like different schools to multi-stage investing. I mean, there are firms that do multi-stage investing, and some of them, because I mean, what makes for a great company in a pre-seed, or how you pick a great company in pre-seed, is pretty different from in Series B, where you have many more numbers and clarity and stuff like that. So, do you have like, how do you set that up? Do you have a different approach? Do you have different partners looking at these things? How do you structure things?
Absolutely right. So we have two different, let's say, investment framework for SANDBOX and then for our later stage. Later stage, we
Mm.
can talk about that a bit later, but I will start with our early stage pre-seed seed. So it's founders. We always say that it's very common, and it's true. We
Mhm.
look at high caliber type of founders that have either domain experience from the past and identify the pain point in their line of job. Now they want to address it, and they want to address it at scale. It's urgent to them to do so. People from let's say a startup background that have built some successful companies, again also at scale, and now they want also to build their own company with their own vision, and they've seen growth from within and hyper growth sometimes. So they've seen some of the best process, and also the wrong practice, or the
Yeah.
negative aspect of growing very fast. So those are the type of founders we want to support. And I was actually yesterday we had some feedback we're giving to our SANDBOX startup from the last cohort, and I was saying, like, all the founders we invest in, they have a founders market fit. They are the right people that we believe can solve for this problem in this market. That's one. And the second, like, they have very strong vision, and it's very clear how they want to address these challenges, or they want to solve this problem. It's just a matter of like getting it done, like step by step, and of course iterating down the line. But they have the big picture, they have the big vision. They're not too sure exactly how they're gonna get there, but we know they're gonna do everything to get there. So
Mm.
founder is essential. Second is of course the market. Like, if there really a problem, is not something that's that we don't need on. It's just another application on top of another application. That's not really essential. There's no depth in the market. We like fragmented market, low NPS type of market, when there's
Mhm.
no clear winner, when there's no proper tech player. It's legacy system, and we know it will be disrupted. It's just a matter of time. Is it the right time now? Like, not sure, but that's what we have to assess. So large entire market, as we always say. And then whether we're in a bundling or unbundling phase, that's also one thing. Are
Mm.
we looking at verticalizing the solution, or are we looking at integrating different solutions into one bundle, like Karim
Mhm.
is doing now, for instance? So you have always those two phases. We want to make sure we're not in the wrong phase when we invest in a startup. So those are the things we clarify pretty fast, and then also just can we support these founders through, again, our network, economic zone? Do we believe we can help them raise in the future? Do we believe actually there's a path for us to reinvest and ramp up within the next 12 to 18 months? And then, of course, we have a bunch of experts that we bring into the program that help us at scale doing those due diligence, or we call them diagnostics internally, because they're not heavy due diligence. It's we're scratching a bit the surface, but we want to make
Mhm.
sure there's some financial discipline, legal discipline. If not, doesn't mean we won't invest. Just mean we'll address that at the time of the investment, and make sure in the second phase of the SANDBOX program we'll address these issues, and we'll fix them with you, and actually we'll cover probably for all of this.
Yeah.
So that's how we look at pre-seed seed.
Early stage. Yeah.
Yeah.
And for the Series B, you have a different approach.
Yeah, it's data driven. It's still founders led, in the sense we sit in founders mode. We spend
Mhm.
actually more time with the founders at a time, like in their office, for instance, with different members of the senior team, just to understand a bit more of the culture. Are people really willing to work over there? Do they want to stay there for a long time? Are they well incentivized? Do they believe in the leadership? Do they believe in the vision of the company and the vision of the founders and the culture of the company? So that's one aspect which is important. And again, if you have domain expertise, if you've been there, done that in the past, it's that really helps, I think, in general. And of course, like which caliber of talent can you attract? Because that's probably one of the main things we assess with the founders is, have you attracted top tier talent from your competitors or other high performing companies? And if they are ready to drop amazing position where they are to come and work with you because they see there's a bigger potential with you, it's really a very strong indication. But then that's when we, let's see Series A and Series B. That's when we start drilling a bit further, especially on the tech side. So we do almost every time a tech due diligence. If it's not just tech enabled, it's fine. But if it's pretty tech heavy or tech driven, then we have some experts that also we hire, and they will conduct a pretty much in-depth tech DD over the course of 2 or 3 weeks, spending a lot of time with the CTO and the tech team, identifying the pros and cons, the weaknesses, the changes that they're facing. So at least we have a full picture on what we are getting into, and what we want to see, of course, is whether the architecture and infrastructure is scalable, whether it's well thought in terms also of business process. There needs to be a very strong connection between the tech team and the business team, and that's sometimes how we saw some our portfolio companies unfortunately fail, like because there's not enough connection between the tech and the business side. So the CTO has to have a strong business acumen as well and speak business as well. Same as CEO should also speak tech. That's one point. So tech, we spend a lot of time on the financial as well, make sure we understand the cash flows in and out, and the working capital requirements, or the assets and liabilities, absolutely everything. We look into details, and then we start looking, of course, at the unit economics, so the business model first, and then unit economics. Whether they make sense at this stage, whether there's elasticity, whether they will make more sense in the future. So
and does like at the Series B, do you need it to be profitable, or what kind of like financial performance are you looking for there?
So we want you to be definitely profitable at unit economic level, but not necessarily on a EBITDA basis or on an income basis. We you have different
makes sense
financial obligations for your business to operate. So that's one thing. But what we want to make sure also is you have a path to profitability, which is obvious. And if your unit economics are good and strong, pretty healthy, let's say margins, then there's no reason to believe that the more you scale, it should not be the case down the line. But that's when we have to assess like the elasticity of the demand. The more you acquire customers, is it easier to acquire new customers? Is there any limitation in your geographies? You need to expand in new jurisdiction. Do you need to expand on the product basis? So we look at all of that, and when we believe that at any point in time in the next 2-3 years, you could be profitable. So usually you raise the rounds, let's say you raise $20-30 million Series B. We want to make sure that at the end of Series B, if there's no additional funding available, then you can just switch off the growth levers and just be profitable.
Got it. Okay, now moving kind of to another track. You spoke at the STEP conference about the lessons to be learned from the Regional Trailblazers. So I was wondering if you could share some of these lessons.
It's always tricky because we haven't seen so many big success first, in coming out of the region. We're many in the making, and that's just a matter of time before we see more billion or multi-billion dollars type of business, and probably a few decacorn in the making. From what we've seen in our experience, you have two type of success path. One is regional, and it's being built over time. One is international. It's almost from day one. What I mean by that, our thesis, we strongly believe there will be a dozen of decacorn being built from the region, especially from the UAE, covering a corridor going from North Africa to Southeast Asia,
Mm.
especially when it comes to MENA region and then including India and Pakistan. So most of our most successful portfolio companies who started here in Dubai now are operating in Pakistan, India, in KSA, of course, is in North Africa. They're looking now also at Sub-Saharan Africa, and they will be moving to Southeast Asia in probably in the next couple of years. Once you cover all those markets and in depth, and you become the number one and sometimes number two in those markets, if they're quite untapped and quite large, then there's $100-200 million type of revenues, like revenue type
Yep.
of companies actually in the making. So for us, that's kind of like the path number one, and that's probably 80-90% of the success that we see is you start locally, you grow regionally, and then
Mm.
instead of going to a more mature ecosystem like in Europe or in US,
Yeah.
you stay within emerging markets, but you grow within those emerging markets, and you build defensibility for when tomorrow, like
Hmm.
a large player from again US or Europe competitor wants to enter those markets, because you build defensibility, because it's very hard to you have to
Hmm.
hyper localize your go to market on each and every country. That's when we see an opportunity. The second option, the second path to success is a bit like what Writer did, and we have another portfolio company called
Yeah.
Enhance doing that at the moment. Is you
Mm.
built here locally, it's great, but then you realize your solution is absolutely unique. There's nobody else in the world just doing that. And so Writer, 6-7 years ago, when they moved to San Francisco, they were already building LLMs and building AI models before it was cool, before we heard about
Exactly. Yeah.
ChatGPT and so on, and always with an angle to be commercially viable. That means they were building, May and the team and Wasim were building enterprise grade type of solution. So
Yep.
again, pretty unique at a time. Nobody's doing that anywhere in the world. Move San Francisco and found success because they were unique, and that was like very strong value proposition that nobody else could offer at that time. So we've seen a few other startups from the region doing that, which
Hmm.
realized pretty fast, like, hey, we're building for the region, but actually there's nobody else who can do as good as we do. So
Exactly.
probably let's try and get more capital across the pond and get into the enterprise market or a massive, anyway, like a B2B market over there. And that's the second strategy that we've seen that tend to work pretty well.
Yeah, I think it's an exceptional success story, and I congratulate you for being an investor early in Writer. To be honest, and similar companies, I think will more and more companies like that. I hope, and I believe will appear. And I guess Karim is also the kind of the example for the first type of success. You know, the one that takes over becomes number one or number two in emerging markets and builds network effects and things like that. That's a great way of looking at success in the region, and how it can really scale.
Yeah.
So, okay, I mean, let me like talk about the UAE for a while. So, I mean, it has a dynamic startups ecosystem. It has lots of capital, lots of ambition, as you mentioned. When you first came in 2012, you felt that energy. It has an open regulatory environment, but also, I mean, to balance that, it's not a very big market, and local talent is very expensive. It's pretty expensive to operate, relatively speaking, from the region. So, what advice do you give founders and VCs that want to be successful in the UAE or starting from the UAE?
So one, we do have talents, and that's the main thing. Because a few years ago, everybody was scrambling to hire, like even like a software developer, like in the UAE. That's not the case anymore. We had an influx of amazing talents coming from all over the world after COVID. So I think now we're pretty much covered. Yes, it's still a certain budget, but at least it's here. It's like just around you. You get to meet the people, you get to build the team and a culture, which is massively different from like 6 years ago. Most of our portfolio companies were building the kitchen, like where the cooks are in different countries. It could be
Yep.
in India, in Pakistan, in Jordan, somewhere in Europe, and so on. Doesn't really matter. Now at least you get to centralize also your tech team if you want. But you can also completely work remotely. It's absolutely fine. But at least you have talents in UAE. You have access to that, which is absolutely essential. As an advice for, let's say, new entrepreneurs or like early stage entrepreneurs, not necessarily new, it's when you build your product, we always talk about like MVP, MVP, MVP. I think there's always a misconception what's a minimal viable product is. It's not the minimum features that you need to be able to provide the service. It's the minimum value that you have to bring to a consumer for them to eventually pay for it. And it's all about bringing value. And especially when you see so many different options, so many different solutions in the market, you don't really know, who's building what, whether it's the right fit for your company or for you as an individual. Demonstrating pretty fast and pretty early on that you are bringing value to your target audience, it's essential. And that's one of the parts we assess through SANDBOX, customer reference, and so on. If the consumer, even if the product doesn't look very good, it's not built like correctly, but it does what it says on the tin, and that's exactly what you were looking for, then there's a good chance you understand first your customers, and you'll get some feedback that you can afterwards implement into your V1. So value, bringing value, having a minimum valuable product or lovable product, so that's another way to say it, is for me absolutely essential. Second is to never underestimate your competitors and never underestimate the market pool. Every time, and it's pretty much what we see in every pitch deck. You have this typical market analysis or competitor analysis when you have like green ticks on every features that you guys have developed, and everything is red for the competitors. That's just one view, right? The competitors will have different view, will have exactly the same slide, and that's the truth. What also we completely underestimate is offline competitors or non-direct competitors. We see many of our founders comparing themselves only to another solution, which is pretty much lookalike, which is not a good sign. If you start looking at other solutions, which are maybe non-tech driven, offline solution, very manual processes, but if they do the work for your customers, then it's competition to you. And that's something we see a lot of people underestimating. So we make sure actually they understand, they have a 360 view of their markets. That's another point. Third is be hungry, but be humble. Don't sell what you don't have. Especially to investors, we'll see through the cracks pretty fast. Whatever you say, we'll verify it at some point. In any case, so it's better to be upfront. And we like founders who tell us, "Hey, I built this. It's not great yet, but I have a few people using it, and they're playing around with it. There's a chance we're gonna sell it to them at some point." That's where we are. Instead of like have 15 POC in process when none of them will convert into a paid contract. There's one thing we want to make sure is you're transparent, because we want to build a relationship with you for the long term. So just make sure you're absolutely honest and with us, but also just with you. So like you have to make sure that
Got it.
just frank with yourself.
Yeah, that sounds like very reasonable approach. And so, I mean, maybe we can use kind of a solved example in the sense that, like, take one example from your portfolio. Last year, for example, you made a pretty large investment in Podeo,
Yeah.
and I feel you believe in it. So, if you can tell us more about that investment, why you decided to invest, and the potential you see.
Yeah, so Podeo is a great story. I met with Stefano 3 years ago when it was just starting. He already had this MVP. I think he had already maybe 1,000 creators on the platform, and he was raising a pre-seed. It was way too early for us. That was actually pre-Oraseya, but I love the guy. I love his energy, and I love the team also. Like everybody was just top notch, like driven on the mission, with a deep understanding of the market. So we talked, and for months and for months. And I always being honest with him. It's like one day may be the time, but not now. And when we launched Oraseya, and at that time, I was like catching up with a bunch of founders from the past, and of course Stefano. We've always been like every 3-4 months, like catching up because he's been very smart in this approach to update investors or prospective investors. He has no expectation. He just wants you to have some information. He's 100% transparent, and when you ask any question, which can be a bit difficult sometimes to ask, he responds with all documents, supports numbers. It's great for an investor to have this type of relationship with our prospective founders. And so that was one of the reasons that we got back to him and say, okay, like I've seen your latest investor update. Numbers are picking up. Seems you have a great audience now. We start seeing a bit of network effect here and there. More and more creators, stickiness into the product, advertisers coming to the platform. Probably it's time for us to look at these investments as potential investments. And yeah, and so we put together a Series A. Can't remember. I think it was 4.5, $5 million, $5.3 million maybe. So yeah, we led this round. We had a few other VCs joining us. We have a few convertibles from the past. So we restructured a little bit the cap table to streamline it. We had different angels, so we packed them up into an SPV. So we've done a lot of legal work before we close this investment. But yeah, like for us, the reason why the thesis behind Podeo is extremely strong founders. Their voice. Stefano is a voice in the podcast industry. Everybody knows him. He's speaking at every event and so on. And yeah, he has just a very strong founder attitude, like founder traits, which we like ambition, vision. He can execute. He's built a great team. He's attracting top talents. He's attracting, well, hopefully great investors. And he understands how to move and iterate on the product. So he's been doing a lot of iteration on the product. I think now he got like a fantastic product compared to the industry. We looked at all the other players from the past, what the offering basically, and we like the fact that it's free for creators. That's one of the main things. It contributes a lot to industry. Hopefully you're using Podeo. And yeah, now we have a lot of advertisers coming, and they want to target this audience. You don't necessarily have many platforms which are dedicated to Arabic content. At one point, of course, this will open up as we scale with Podeo. But yeah, it's a great founder, large industry, a lot of potential because you have a lot of data points in language data points that you have access to. So you can imagine also what we can build on top of that.
Data. Yeah.
Yeah. And for advertisers, media company, you can actually tailor your offering to certain regions, certain dialects, and so on. So a lot of things happening with Podeo.
Interesting. Yeah, great. Best of luck for him and the whole team and you guys. So, all right, another company you just recently made a Series A investment in is Ogram, which is in an interesting area. So if you can tell us a bit about it and why you invested.
Sure. So Ogram was led by Shafiq, a fantastic founder. So we invested with Global Ventures a few years back, and last year they really hit some major KPIs. So we actually led the extension of the Series A. So Ogram, what they provide is workforce on demand. So if you are a retailer, a supermarket, like a Noon or a Talabat or an Amazon, and you need like blue collar workforce, like temporarily, so for sometime like a week or like a month without having to recruit FTEs, then you will use Ogram. So Ogram will provide like hundreds of staff on demand for like a week to a month to multiple months to those large organizations. So the main industries we've seen them covering is again retail, F&B as well, because you have different cycles for F&B. So you might not need as many servers in the summer as you need actually in the winter. So you go through Ogram, and they will fill the demand, on the go. If you need like a cook or a line manager or like a bartender, And so they've been working extremely well, been growing extremely fast in UAE and now also in Saudi. So we led the last rounds. They've been growing tremendously since actually we invested, and they also operate in Greece in the hospitality and tourism sector. So they have a foot
Interesting.
already in Southeast Europe, and they will expand further in the region afterwards. Great business.
Interesting. So looking forward to see how things progress there. I wanted to ask you like a general question about like the general environment in terms of, the last couple of years have been tough in terms of liquidity and exits globally. So there haven't been that many IPOs even in the US. LP investments have therefore like slowed down since 2022 into the investment space. Of course, maybe, I mean, you're not affected directly because you're connected to the IEZ, but how have you seen these trends in the Arab region in terms of LP liquidity for venture capital?
I think it's been very tough to for our peers as more like private VCs to raise effectively. I don't think there's a lack of appetite from LPs. I think it's just the economic environments that you might have some arbitrage, and early stage venture capital might not be at the top of their mind at the moment, but I think it's coming back. We see more funds like closing, doing their first closing or announcing you know, new funds. So that's actually pretty exciting. And then, of course, in terms of the other part of the equation, which is liquidity. Well, we've seen a few nice exits, like, and especially there's been the largest IPO ever, which is Talabat. There was, I think, in November,
Yep.
December last year that went very well. So I think this will signal uh, very positively. Now, of course, it's a bit tricky with the situation in the US and instability and volatility in the market. So might have a window that was open for a few months, which is closing down now, but eventually it will reopen. There is 7, 8 names that we all know that are prime candidates for public listing, either in Saudi or in UAE. So when that happens, money will flow back into GPs and LPs, and then we'll see some of this money being recycled. Because again, it's DPI is essential, and for many
Yep.
funds, DPI has been the issue. TVPI has always been the key metrics. We showcase performance, but DPI is just everything. For us, we've been lucky with a few exits last year that return all the original investments, and we still have in our books some excellent position on the legacy portfolio of Oraseya. So at least
Wonderful.
we're DPI positive. And again, that's also how we build confidence to accelerate our deployment with Oraseya. So we'll see more of that. It's just a matter of time. We see more and more so later stage funds coming into the market. We've seen that with Nimcal, for instance, with QED, with the debut investments in the region. We see more and more funds coming in the region later stage. We see more and more appetite for private equity firms to look for mandates here as well. So Lazard,
Mm.
for instance, just opened an office here in the region. We know they're looking at tech companies. We can't tell you which one, but we know they're looking into them. So definitely there's something happening, and a lot of people, and part of my job. I attend different conferences. I I will participate to the different JITEX, for instance, or every time Dubai Economy and Tourism will create a stand to promote Dubai. We're part of course, of the Dubai government ecosystem, so we'll go and educate. And part of my job is purely to educate about what's happening in Dubai. Where is it like a good place to either start, move your business, or move your funds or your family office. And I've seen so much appetite over the past 2, 3 years because they
Mm.
realize, hey, it's just not a standalone country. It's actually part of a much wider region. And there's massive consumer trends, very young demographics, high mobile penetration, high internet penetration, strong purchasing power, you know, like many opportunities that for you
Hmm.
entrepreneurs could be absolutely excellent as a or as a fund manager. So yeah, we've seen more and more of this appetite.
Great. So, speaking of entrepreneurs, what's your, when you're getting to know founders, what's your favorite question to ask them?
My favorite question to ask is, if today I give you $5 million to buy your business, do you take it?
Mm,
You can ask that. Like that gives you a little bit of an idea, or are you here to make money and in the short term, and that means if there's an opportunity for you in 3 4 years to sell your business for, I don't know, 10 15 $20 million, you'll go for it? Or are you here to solve the problem? And in that case, how much you're going to make down the line is not necessarily the issue. You're going to make a lot of money if you solve this problem once and for all, but you're not looking at like a number, or you're not looking at like selling now. You're not looking for comfort now. You're looking for comfort down the line. But first and foremost is your vision and solving this problem. It's one of the questions I usually ask.
yeah.
But you need to know the founder, and you have to ask it in an informal way, not on the first meeting, not like that. Closing
Yeah.
close to after a few meetings, like just like in informal meetings. Hey, if now you had $5 million, will you still do what you're doing now? And you see a broad range of response.
Yeah, it's a great question to find out the core motivation, isn't it? So, what a bit of a weird question, but what's the quickest investment decision you ever made? I mean, what just you didn't need to think? It was
Yeah,
obvious for you.
remote pass was the fastest decision we ever made, and the fastest in terms of process as well. So we had just started Oraseya. That was, I think, officially our second investment. We had high school just before, even though high school got announced afterwards. But I've heard about remote pass for quite some time. I've known Kamal for quite some time, and we looked into it in the past, but we didn't have the bandwidth to do any deals before because we're launching Oraseya. So as soon as we launched Oraseya, I called Kamal and said, "Come over, please. Let's have a chat." We look into it. I think 2 days after, we brought the other IC members, so William and Hassan, and we're like very keen on the deal, especially where it will be the last ticket, basically. So I had to fight and convince Kamal would be a good partner to get this last allocation. So basically, we took whatever we could in this round, and then within 10 days, we closed the due diligence, and 5 days after, we funded the company. So yeah, that was probably less than a month.
Nice.
In 3 weeks, we from
Yeah,
first meeting to funding.
sounds like you're really excited about the founder and the team.
They're doing
Uh,
great.
so
They're doing great. Absolutely great. Kamal is and the team. They're just top notch.
So I mean, speaking of the investment committee, because you mentioned, you got them. You guys make, as a investment committee, do you make decisions unanimously, or is it majority? How do you kind of go through that process?
So we're three IC members. So any investment which is up to $500,000, we can approve. Anything which is
Hmm.
above $500,000, we recommend, and then we have a board, which two of our IC members are part of the board as well. So that facilitates a little bit the process, of course. And so yeah, so it's unanimous, yes. Like we need three yes. So I'm usually the first one. Like, of course, I manage investment team. I have to be convinced that that's an
Yep.
investment we want to pursue. And then we bring the IC members, the other IC members, so William and Hassan, pretty early on in the process. So if
Hmm.
after like probably 20-30% of our initial like discovery phase, due diligence phase, we like what we see, and we build a good report with the founders, and we think there's an opportunity here, we'll bring them for validation as well. So they will meet with the founders like 2 or 3 times
Yep.
in the course of like a week or 2 weeks. Uh, in the meantime, we close our due diligence, and then we do a formal IC again with the founders. Sometime it's just the three of us, and we say, look, like everything is
Hmm.
green. That's the investment memo. What do you think? We challenge with thesis. We ask ourselves like the pros and the cons, and if we don't have any objections at the end of the day, then we go ahead and we either approve or recommend an investment. And with our boards, they're amazing. They spend a lot of time actually looking at what we do and asking questions. They are very curious. And so we spend time explaining what is this business about. If they want to meet the founders, they're more than welcome. Of course, we'll bring them into the loop. But we tend to pitch basically to our boards for approval, and that's we need our chairman approval and our other our board members approval.
It's really impressive that you can do it so fast, considering it's a government authority. Very impressive. So maybe before I start winding down the quick fire questions, I wanted to ask you. I mean, one final one, which is, if you have a magic wand and you can change whatever you want about the regional ecosystem, what would be the thing you change to improve things?
That's a good question. So for me, if I had a magic wand, the main thing is improving liquidity. As simple as that. The more liquidity we get, the more founders get to exit. The more money is coming back, of course, to GPs and LPs. And there's just a flywheel effect afterwards. It's being recycled. It helps increase and the amount of investment being deployed. Founders that again have been building those companies want to either do it again, or some of their employees that want to do it again, which means founders will be investing in future founders as well. They'll be participating to even programs like SANDBOX, as well as mentors and so on. For LPs, it means like the system works, you return, so that bring more confidence into the market. So you deploy further into either existing funds or even emerging GPs. So yeah, liquidity is what I think we're missing a little bit, and that would be like the thing to fix immediately if we could.
Yeah, and it's the logical next step, kind of, in the maturity of the startup ecosystem in the region. Because at the end of the day, it's not that old an ecosystem, so it takes time.
It takes time, and we're gonna get there eventually. It's just a matter of time, as you said. It's natural, and we've seen already over the years the progress is completely different than it was like 10
acquisitions,
years
some IPOs now in Saudi Arabia and UAE, even Egypt. So, okay, so I'll go to the quickfire questions now. So what book do you like to recommend to others?
There's one book that I absolutely love, especially as a kid, but I read it again a couple of months ago. It's a French book called La Nuit des Temps. So I think it's The End of Time, or The Frozen People in English, which is a utopian fiction about a world which is driven by technology, and I won't say what happens afterwards. But it's a book that was written by René Barjavel in 1962 or 1963, I think, which is quite visionary at that time.
Interesting, nice. It's one that I don't hear a lot on the podcast. It's the first time I hear it, actually, so I'm very happy to have something new and original. So how do you unwind and how do you stay energized?
So first, I wake up very early every morning. I'm early riser, so anywhere from 5:30, 6 a.m. usually when I wake up. I do sports every morning. That means I tend to play golf, even in the morning. Actually, just like a quick nine hole or driving range. I run. I used to go to the gym, not as much now as I want to be. And just like spend a lot of time also with my lovely wife.
Wonderful. So who do you think we should have as a guest on the podcast?
So as founders, I can recommend easily like 5, 6 like very strong CEOs. Like actually the one we talked earlier, like Shafiq from Ogram, Stefano from Podeo, Kamal from Remote Pass, Tarek from Enhance, I think would be fantastic. Tarek would be a very, very, very good fit. In terms of VCs, I think Daniel Dos Reis from Wanda, if you haven't interviewed him, I used to work.
Not yet.
I used to work with Daniel, actually. I absolutely love the guy. One of the, for me, brightest VCs here in a region. He works for Wanda and
Yep.
Fali Gandour. So that would be another one. And yeah, if, yeah, I think that would be kind of my answer.
That's a good list. What question should I have asked you that I didn't?
Like, I would say probably what's my priority as a partner of a fund? Is it investing? Is it portfolio? Is it admin? Is it LP management? I think that would be the question
Mhm.
that
Yeah. So can you give me the 1, 2, 3 in priorities?
yeah, actually, number one is my team. It's clearly is 100% building a solid team, training the
Hmm.
team, making sure they love coming to work every day because we work very hard. We are like, committed to their craft and the mission, and it takes time for me to recruit. But when we recruit, I'm 100% confident in the ability of the person to deliver. And the team we built over the past 12, 18 months is second to none. I'm really, really proud and super excited of working with them every day. So that's priority
It's
number
great
one.
to
Then
hear.
investment and portfolio. But number one is the team, 100% the team.
Nice. All right. So I like to close on a note of gratitude. So, what is a gift someone has given you that has had a large effect on you?
A gift that's been given and has large effect on me. So recently, uh, I turned 40 a few months ago, and so I got a gift.
Congratulations.
Thank you. So I was working that day, like it's a lot of things to do. Just got home, thinking I would just see my wife, have just like a nice dinner, and my best friend from France actually traveled and was just there in my kitchen. And I was so surprised, of course. And the fact they've organized that without me knowing for like a few months, I was extremely thankful to my wife first for organizing that, to my friend for traveling, and we live in such a fast-paced environment. We work a lot in this industry, and sometimes you forget about your friendship. You forget how deep your friendship can be.
Yes.
For somebody to take a few days away from work, from his family, to travel for a few days and just because it's I was born on that day 40 years ago, so it's I found that an amazing gift, the gift of friendship.
It is an amazing gift and one that I think is provides so much value to people and so much substance to their lives. So it's a great thing to end on. Thank you very much for the gift of your time as well, Julien, and happy to have had you on the show.
Thank you, Ali. It was a real pleasure. Thank you for the nice conversation.
Thank you for listening to this episode of Startups Arabia podcast. If there was something you really liked about what the guest said today, reach out to them on social media and tell them what you liked. And of course, if you haven't subscribed yet, what are you waiting for? You don't want to miss any of our great upcoming episodes. Also, please rate us and give us comments on our social media accounts so that we know how to improve. And also tell us what you like. We don't mind hearing that either. Until next time, this was your host, Ali Zwail.